You can use the seller contributions to buy down the loan. Seller concessions, also called seller assists or seller contributions, are closing costs that the seller pays to help the buyer by reducing the amount of cash they need to close. What are seller concessions? Seller concessions are payments or other financial benefits offered by the seller to the buyer in a real estate transaction. These concessions can be used to help the buyer cover closing costs, such as lender fees, title insurance, and property taxes. Seller concessions can take a variety of forms, including 1. Closing cost assistance. The seller may offer to pay a portion or all of the buyer's closing costs as a way to make the sale more attractive. 2. Prepaid items. The seller may offer to pay for items that the buyer will be responsible for paying in the future, such as property taxes or homeowners insurance. 3. Repairs or upgrades. The seller may offer to make repairs or upgrades to the property as part of the sale. 4. Price reductions. The seller may offer a lower sale price in exchange for the buyer agreeing to take on certain expenses, such as closing costs. Seller concessions are typically negotiable and are often used as a way to make a property more attractive to buyers or to help a buyer overcome financial barriers to purchasing a home. It's important to note that seller concessions may affect the lender's assessment of the borrower's ability to repay the mortgage and may impact the terms of the loan. Asking for seller concessions could lighten the financial burden of these costs and make it possible for you to get into the home you want. They're available on any type of loan, including FHA, VA, and USDA loans, though there may be special requirements for both parties in these cases. What are the max seller concessions? Down payment amount and seller concession limits for conventional loans. Conventional loans. If your down payment is less than 10%, seller may contribute up to 3%. Less than 10 to 25%, seller may contribute up to 6%. Greater than 25%, seller may contribute up to 9%. Government-backed loans and seller concessions. If your mortgage is through FHA, seller may contribute up to 6%. If your mortgage is through VA, seller may contribute up to 4%. If your mortgage is through FHA, seller may contribute up to 6%. Save money with a buydown? What is 2/1 buydown? 2/1 buydown is actually just a fixed-rate mortgage where a portion of the payment is prepaid for 2 years. The rate itself never changes. You can reduce your interest rate by 2 percentage points for the first 2 years of the loan with a 2/1 buydown. During the most expensive and important years of homeownership, this makes homeownership more affordable.